Something just broke in the silver market. And I'm not talking about a price move. I'm talking about the actual mechanism that tells the world what silver is worth. If you're holding physical metal right now, the next 48 hours could change everything. Nate Saint here with Peak Life Wealth, helping you protect your hard-earned money from inflation and build real, lasting wealth. It's December 31st, 2025, the last trading day of the year. And while most people are getting ready to pop champagne, the silver market just flashed a warning signal that should terrify anyone who doesn't own the physical metal. But here's the thing most people missed. This isn't happening by accident, because in the last 72 hours, we've seen 3 events collide that prove the old system is breaking down. And when you connect these dots, you'll understand why 2026 is the year the squeeze becomes undeniable. First, the paper market just had a seizure. Yesterday, silver crashed from over $83 down to $71. But within 24 hours, it recovered $335, climbing back to $74.54. That's a 5% bounce in a single session. This wasn't a correction. This was a bear trap. The banks pushed the price down, triggered stop losses at $72, and then immediately reversed. Classic manipulation during thin holiday trading. But here's what's critical. The physical market didn't follow. When futures dropped to $71, dealers raised their premiums. Physical silver coins were still trading $10 to $15 over spot. That spread is the smoking gun. Now let's talk about December 27th. While everyone was recovering from Christmas, the Federal Reserve quietly injected $17.25 billion into the banking system through emergency repo operations. Why did they need $17 billion? Because banks holding short positions in silver were facing margin calls they couldn't meet. When silver spiked to 70 cents, every dollar it rose created billions in losses. They ran to the Fed and pawned their treasury bonds just to stay alive. This proves the banks are insolvent. They're surviving because the Fed is keeping them on life support. And here's the trap. To save the banks, the Fed prints money. But printing money devalues the dollar. When the dollar loses value, silver goes up, which means the banks need another bailout. It's a doom loop. Now let's look at the physical market. According to COMEX data, we're seeing 12,777 delivery notices for December. That's 63.5 million ounces being demanded. That's 8% of annual global mining supply in a single month. The longs want the metal, and the registered inventory is near historic lows. The vaults are effectively empty. So how do banks fulfill deliveries? They buy physical silver at whatever price it takes. This forced buying is rocket fuel. And here's the final piece. In Shanghai, silver is trading $5 to $8 higher than New York. That spread shouldn't exist. But it's not closing because China reclassified silver as strategic with export controls. The flow is one way. This is what a broken market looks like. When paper and physical divorce, the pricing mechanism collapses. So where does this leave us? Tomorrow, China's export licensing goes fully into effect. With the Fed bailing out shorts, physical premiums exploding, and delivery demand at records, we're looking at a perfect storm. The technical target for Q1 is $85. But if one major bank fails to deliver, we could gap to $100. Not because of hype, because the system is breaking. The crash yesterday was designed to steal your position. The recovery proves the floor is solid at $75. If you're waiting for a dip, the risk isn't buying too high. The risk is you can't buy at all. We're already seeing delays into February. Once wholesalers run out, the buy button disappears. If you're wondering how to position yourself, I've put together a free guide called the Inflation-Proof Wealth System. It's designed to help you the way I wish someone had helped me. Go to the link in my bio and grab your copy. It's completely free. I'm watching things closely and will keep you updated as this unfolds. You now know what most people don't. The next update could change everything, so make sure you're here for it. Stay sharp, stay stacked, and I'll see you in the next one.